And Federal Reserve Chair Jerome Powell will speak. This past week, the US presidential election dominated the markets, exclusively in all the things that could happen once the price finished this downward movement. Hello everyone, I'm Isaac Martinez, trader and analyst at xChief. Today we're diving into the latest market movements following the re-election of Donald Trump and the recent Fed cut. We will cover how this optimism has sparked rallies across the crypto and stock markets, sending the S&P 500 and Bitcoin to all-time highs. Stay tuned. As always, we start with the economic calendar, and don't forget that this is based on GMT -5. So at 2 a.m. on Tuesday, the UK will release the climate count change, which shows the change in the number of people claiming unemployment benefits. An increase in claims could indicate economic difficulties and may negatively affect the British pound. On Wednesday at 7:30 a.m., the US will release core CPI and CPI data, which is the Consumer Price Index, which measure inflation excluding volatile items like food and energy. High inflation could lead the Federal Reserve to consider raising interest rates, which tends to strengthen the US dollar. On Thursday at 7:30 a.m., the US will also release core PPI and PPI data, which reflects producer price inflation. This is an early indicator of broader inflation, as higher production costs can lead to higher prices for consumers. At the same time, the unemployment claims data from the US will show the number of new applications for unemployment benefits. A high number of claims could signal a slowdown in the labor market after raising concerns about the economy's health. At 2 p.m., Federal Reserve Chair Jerome Powell will speak. His comments may offer insights into the Fed's future monetary policy, directly impacting currency and equity markets. On Friday at 1 a.m., the UK will release its GDP, which is the gross domestic product, an indicator of economic health. Positive growth generally strengthens the pound, weakening it. At 7:30 a.m., the US will publish core retail sales and retail sales data, which reflects consumer spending and confidence. Strong sales can be a sign of a healthy economy, which tends to be positive for the dollar. And now heading into the most important news. This past week, the US presidential election dominated the markets, influencing gold prices as well. While spot gold initially traded within a narrow range, it sharply declined as election results leaned towards Donald Trump's victory, making Kamala Harris' presidential bid unlikely. Gold fell from $2,739 per ounce down to $2,659, reaching a weekly low of $2,648 before gradually rebounding. Despite a brief rally following a Federal Reserve rate cut, the price struggled to maintain gains and fluctuated in the 2,680s. Market sentiment remains largely bearish, with analysts predicting further declines for gold. Experts see the strengthening US dollar and rising bond yields as primary factors pressuring gold, as well as reduced demand from central banks and China. Technical analysts observe that gold failed to establish support above $2,700, suggesting potential for continued weakness. Market strategists like Darren Newsom, David Morrison, and Adrian Day believe further corrections may occur, driven by profit-taking and ongoing economic uncertainties. Next week, economic data releases such as the US core CPI, PPI report, and retail sales are expected to provide further market cues. Meanwhile, Federal Reserve Chair Jerome Powell will address the economic outlook, which may impact gold's movement. A majority of analysts and retail investors expect gold to trend lower, though some see the dip as a potential buying opportunity if prices stabilize around $2,600. And now heading into the crypto market, the election of Donald Trump as the new president of the United States has injected optimism into Bitcoin, with expectations for pro-economic policies and increased support for crypto-friendly regulations. This sentiment was further fueled by the recent 25 basis point cut by the Federal Reserve, seen as a step toward easier money policies. However, concerns persist about whether further cuts will be possible in 2025 due to inflation pressures. This positive sentiment pushed the S&P 500 above 6,000 points and the Dow to 44,000, while the US dollar and treasury yields pulled back, favoring risk assets. Precious metals such as gold and silver declined during the trading session. Bitcoin reached a new all-time high, climbing to $77,150, driven by record inflows into spot BTC ETFs, with 1.4 billion pouring in. Bitcoin's growth is also supported by macroeconomic factors and its regular halving cycle. Trump's victory and his promise to remove regulator Gary Gensler have raised expectations for more favorable crypto regulations. Ethereum also gained institutional interest, with Michigan becoming the first US state to invest in ETH ETFs. Finally, while altcoins like Kronos and Cardano posted significant gains, others like Constitution DAO faced losses. Now let's continue into the most important things that you need to consider for the next week related to the assets we analyze. So we start with the US dollar index, and we can see that this week, after manipulating this low of 103.421, we have seen a strong upward movement that broke several bullish targets. The last one we have established was 104.636. After this, as you can see, we are keeping an upward trend, so it's highly possible that we can continue seeing an upward movement for the next week. So considering only this interval of time, 4 hours, I think one of our targets for this week could be for the US dollar at 105.441. If we want to consider more targets, we need to go further into the history of the US dollar index, and we need also to consider these targets that are in the 106 and 106.126 level. And finally, if we want to consider another target, yes, we can also consider this one, which is close to the 106.544, but it will be difficult for the price to reach an upward movement that can be sustained through all these days. And also considering that there are not so many fundamentals for this week, we need to stay cautious with the projections we're making. So yes, I'm defending an upward structure, but it's difficult to also just keeping an upward movement. Remember that eventually the price will fall because of a pullback, or because maybe it is time to have a big and bearish movement for the US dollar index. Next chart, SP 500. I have already mentioned about this asset, and as you can see, the SP 500 broke several targets of this week and also established a new all-time high. So with the Fibonacci retracement, we have established several targets, also bullish targets. I didn't think that it was possible to reach more targets than this one that I have established here, but as you can see, the price did a strong upward movement after the presidential election in the United States. So if you look the precision of our analysis, we have established also the 600 as one of our targets for an all-time high. You could see that if we establish here a line, we draw a line, the price is reacting to that point of the SP 500. After this, we need to see if the price can have a pullback. This pullback can be related to the several points that the price have led, like for example this fair value gap with this vacuum block. We can also consider this fair value gap from here. We now have also this vacuum block here. So well, we will have several targets for the week. I don't think that it will be more of a downward movement for this week, but please consider at least a correction to this point of the price, and I will establish a target here, which is in the $5,946. After this, maybe if the price have enough gas, enough liquidity, we can see a new movement that can continue with an upward trend. If not, you can also consider these bearish targets at $5,890, and this, which is related to the vacuum block, to all this liquidity gap that you can see here, located at $5,824. So basically, before continuing an upward movement, I would like to see a pullback to have more gas, to have more liquidity, to now start a new upward movement. Let's go to the next asset, the Euro US dollar. And as you can see, we are keeping a downward structure. It's easy to understand. I don't even need to draw this for you, but well, it's just for you to understand. So we established a lower low this week, located at 1.06826, and after this, it's highly possible that we can maintain our bearish targets located at 1.06498 and 1.06018. So I will keep these targets, and maybe after reaching these targets, we can consider a new upward movement, but it will depend exclusively in all the things that could happen once the price finish this downward movement. So finally, last asset, Bitcoin. Last week we have established this target at $73,624, and as you can see, we're maintaining this upward movement. With Bitcoin, you need to consider that we are seeing a rally, a famous movement that we were expecting several months ago. So it is highly possible that Bitcoin continue this upward movement, not just like this, not just like going up without having a pullback, but eventually the price will try to gather more liquidity. Maybe it could go to this fair value gap, which the most sensitive price at $71,848. As you know, it will try to go there to have more gas, have more liquidity, and after that, Bitcoin could maintain its upward movement. Finally, if you are establishing bullish targets for Bitcoin, please don't forget the psychological levels. One of the psychological levels, for example, could be $80,000. And that's because Bitcoin is really sensitive to reach psychological targets, and after that, after manipulating those targets, it can have a pullback. Thanks for watching. In summary, the market is in a strong uptrend with key factors aligning in both stocks and crypto market. Remember to hit the like button if you found this video helpful, and subscribe for more insights on market trends. And if you are ready to trade the assets we analyzed, check out the link in the description to get started with xChief. Happy trading, and see you in the next video.